Galaxy Next Generation has clearly been one of the most popular stocks on my channel, of course, and in the overall penny stock market at the moment. There has been a lot of talks. Many big investors are starting to talk about them now. Many big YouTubers are starting to talk about them now. Me, the London investor, we've been on this thing for the last couple of weeks at this point. We've been going at it, so big shout out to him. But one thing that I did want to say is that as we have been posting a lot about this company, and as I have been talking about all the good things and the perks and the benefits, one common thing that I am seeing in the comment section is that we're talking about, that we're talking about all of these good things and not necessarily talking about the risks and talking about some of the bad things that are, associated with this company. Now, I am typically a very optimistic person. I'm not going to lie. I tend to look at things in a positive light. But with that being said, there are some negatives and there are some things that do need to be worked out with this company that I am not ignoring at all. With that being said, let's go ahead and let's jump straight into the video. If you are excited about today's video, if you find it valuable or informative or entertaining or anything like that, you can let me know by smashing that like button and subscribing to the channel if you are new. If you do enjoy this content and you have any suggestions or recommendations for future videos that you would like to see, definitely let me know in the comment section below. I read every single comment that you guys post and I really do pay attention to what you guys want to see. A lot of these videos that I make now are about the comment section, as this one does come from some of the negatives that I have seen in the comment section. So again, if you have any suggestions or recommendations, again, let me know down there below and I will check it out for you. With that being said, let's go ahead and let's dive into the risks of Galaxy Next Generation, ticker symbol GAXY. So what exactly have we all been seeing? Like I said, we've been seeing a lot of their financials being brought up time and time again whenever it comes to what the risks and the negatives about this company are. We are all aware of what some of the positives are with their overhaul of their website on the way, with the increase in their product line, with all of the deals and contracts that they have been working out. They have been doing phenomenal things. But one thing that we can note, if we do look at their 10Q, which is what I'm going to pull up in a second here, is that they do have some financial things that they need to work out for sure. I'm not going to ignore this whatsoever, and I'm not going to pretend like this company is absolutely perfect and they do nothing wrong, because that is not true. I will say that they do have a history and they do have a past and they do have things that they need to work out if they want to continue on the success and this momentum that they have seen over the last few weeks. So let's go ahead, let's jump into the 10Q and let's see exactly what their financial results have been and what they could do going on into the future to improve these results. So I pulled up the 10Q and I was going to want to compare the September 30th of 2020 to the June 30th of 2020 results. So one thing that I have noticed just off of rip is that we can see that their current liabilities compared to their assets is not the best. Now, whenever we do see that their total liabilities are $11,344,000 compared to their total assets being $5.2 million, that is over half, and that is not necessarily the best. Of course, you would like to see a company with more assets than they do have liabilities. That is optimal for sure. But with that being said, what is this all come down to, and what can we see going on into the future here that makes it seem as if there is some positive movement going on? So what I do first notice is that in comparison to June 30th, September 30th wasn't as bad, considering that we did see their assets increase from 4.49 to about 5.2. So that's a $700,000 increase in their total assets over the course of those 3 months. Now, whenever we do come down here and we take a look at their total current liabilities, or their total liabilities in general, we can see that in that same time frame, they cut their liabilities down by nearly $1 million. Now, I do believe that this could have have been somewhat of the fact of, what everything was going on with the pandemic. We did see around this time, everything was still closed. So I could assume that everything was paused with their assets and that their liabilities probably increased as they were maybe not producing or they were having a whole bunch of other issues going on there. So as things did start to reopen, we could see that they immediately started to, of course, grow their assets and drop their liabilities. And that is what I like to see whenever I make the decision on whether I'm going to invest into a company. Because yes, of course, their assets are outweighed by their liabilities substantially. I am not saying that this is good in any way. But what I am noticing is the fact that they are making steps in the right direction in order to fix this problem. Because what would be a negative and a reason that I would maybe not invest into this company is if these two were flipped. If we saw maybe that in the middle segment of 2020 that we did see that their assets, were maybe 5.2 million, and then later on, 3 months later, we saw a drop in assets, and then in that same time period, we saw an increase in their liabilities. That would let me know that they are having less, there's less components making them money and more components costing them money, which is definitely not a good sign. And that is something that we do see quite often. We see a lot of companies, especially this last year in 2020. We saw many companies losing a lot of their assets and growing their liabilities as a lot of these factories and a lot of their other production facilities did start to close. So with that being said, whenever we do take a look at just a general understanding understanding of what they have going on with their assets and liabilities. I do understand that this is not necessarily the best, and I do think that they need to work on it. I think as they do continue their product line and as they continue to grow out all of their products, they will see an increase in assets. One thing that does stand out to me is this drastic increase or decrease, in their total liabilities. I think that it shows me that they're working very diligently month in after month to continuously try to drop these things as fast as they possibly can while increasing their assets overall. Now, with that being said, I do believe that going on into the future here, whenever it comes to their assets and their liabilities, that we will see this thing completely start to make steps in an even better direction when we do get the reports of the last quarter of last year. Because with that being said, we saw that they made the increase from June to September, and even from June to September, the whole world was still pretty rocky. Now, I'm not saying that right now the world is even in a better situation than it was in September, but I will say that seemingly more businesses are open, more schools are starting to be open, and a lot of these other things that will make them money, make them revenue, increase their assets in general are going to, they're going to be working a little bit better. So with that being said, I would not be surprised whatsoever to continue to see them increase their assets and decrease their liabilities. Hopefully, if they continue, to keep working at these rates that they worked in those 3 months right there, we could really expect to see them start to even those out very soon here. I think that we have never seen them start to increase their production. We've never seen them have so many deals and agreements. We've never seen them do so much marketing as they are now. And I think all of these different little investments that they're making back into their company will continuously increase and better their financials for sure. So with that being said, let's go ahead and let's come down here, because something that I didn't want to talk about is the fact that they're cash right here. So one thing that I did notice is that they were not doing horrifically with their cash, which is something that honestly, I'm not going to lie, it did surprise me. Because whenever we see this, right, whenever we think about cash, especially in last year, cash is something that a lot of companies were burning through very, very fast throughout 2020. We saw many companies, especially some of the ones in other industries like airlines and, some of the cruise lines, especially travel. A lot of the travel stocks, maybe even some of the other industries really struggled when it came to cash because they were having so many issues with things being closed down. They were unable to, have the right production. A lot of delays were happening with production, and we saw them burning through cash very, very fast in order to maintain. With that being said, we did notice that over this 3-month period, even though it's not even $500,000, that $400,000 in cash isn't the most, but the fact that they were capable of maintaining that cash balance definitely lets me know that they were doing something right whenever it comes to maintaining where they were and not letting themselves go under. Of course, we would like to see this cash being increased over these 3 months here, but even in a situation where they weren't going, much lower, it's a loss of about $1,000. Not burning through too much cash over the course of Q2 and Q3 of last year is definitely a positive sign in my opinion. Now, if this was a normal year, if this was a year where we didn't see a lot of situations, going on and things going wrong with the pandemic and everything, I would say that this would be a negative. I would say that if their cash is not moving, that it means that they are not moving fast enough. But I would say that they're doing a very good job of maintaining where they are in order to maintain their cash balance. Now, one thing that I did want to note as well, we can come down here and we will look at their revenue. Now, this is where we see a lot of issues. This is where I will say I am starting to see some stuff that is not necessarily the best. Well, if we do go ahead and we take a look at 3 months ended September 30th of 2020 and 2019, we can see a few different things. So as we can see here that it did go from $624,000 in revenue in 2019 to nearly doubling that up into $1.17 million in 2020. Now, with that increase of revenue, we did see an increase of their cost of sales from $493,000 to $833,000. Now, yes, of course, I would say that if we did, somehow manage to see that their cost of sales did decrease as their revenue increased, that would be optimal, but that's a lot more hard to pull off, especially in the situation that they're in. But I will see that, I will say that we are seeing a drastic increase in revenue in comparison to cost of sales whenever you think about it percentage-wise. Currently, last year from 2020 to 2019, we saw an increase of 88% in their revenue, and we saw an increase of 68% in their cost of sales. So that shows me that their revenue increased 20% more than their cost of sales did increase, and I would say that it is a pretty good sign because you don't want your revenues to be increasing at the same amount as your cost of sale, because at that point there's almost no point in even increasing your cost of sales or increasing your operating costs or anything like that, because you're not making more revenue. It's not compounding at all. It's staying very stagnant. So this is where we do start to see a few faults. Now, the general and administrative expenses did go from 1.3 million up to 2.7 million, which is it's over actually a 2 times increase from 2019 to 2020. We did see a whole bunch of loss from operations. It was another almost doubling from 1.9 million up to 3.8 million. We can see that they have a whole bunch of other expenses that they were working out, and their net loss in 2019 went from 2 million up to 13 million in 2020. Now that is a very, very big jump. I would say that they need to definitely work on cutting down on some of these expenses, as they are costing them a lot, especially some like these right here, or maybe some of their losses from operations if they can start working on it. Now, one thing that I will say off of rip that I will say, and I'm not making excuses for this company, but I'll give them the benefit of the doubt in the sense that last year was a very hard one whenever it comes from losses from operations. Now, the reason I'll go ahead and say that is because so much closed down last year, and there were so many shutdowns, so many delays. Whenever you're trying to get all of these different products out, and a lot of these facilities and factories out overseas, they're closed down because there's no working together and all of these different issues. We can see that a company like this one, who is upping their production, who's trying to up their operations, who's trying to get out all of these different products and up their marketing, whenever you take that mix of a company who's increasing their marketing and production, but having issues with production and having issues with trying to get these things sold, it's going to cause a drastic gap between how much they're spending and how much they're making. So what I will say is that, okay, I do understand that a lot of their operating expenses definitely need to be worked on, and they need to figure out ways to cut down on some of this because they are working very hard, which is a good thing, but spending a lot of money, and it is going to be very hard to close that gap. But what I will say is that when you look at this in a broad perspective, right? If you think about the fact that they're upping their production, upping their marketing, getting more deals now than ever, they're getting in with school districts, getting in with different schools, it seemed like they were almost working so hard last year, knowing that this year, when everything reopened, that they were going to see a drastic increase in their revenue. And it does make sense to me because this is something the CFO actually did talk about, is the fact that they didn't slow themselves down. Whenever we do go look on 10Q, I believe it's page 37, we actually see that whenever they talk about operations from COVID, that they didn't slow down on their operations. They kept it going. They kept trying to get all these different products out. Their engineers were consistently putting out new products, working to get all of these, to widely diversify this portfolio that they're going to then be selling. Now, this was all in preparation, knowing that this year, whenever schools reopened, that there were going to be new accessories. There's going to be a whole bunch of new things that schoolings were going to need, like the Cove Shield, in order to operate. And they wanted to take advantage of that. So they took the time and they took the risk of increasing their expenses and increasing these operating costs, and go ahead to invest that again, invest into all these new products, invest into these new management and the new people to get a year like this one started how they are. December was a fantastic month for this company. Let's go ahead, and if I just go ahead and I pull up this article right here, we can see how much they've been doing over the course of just the last month with the G2 adjust amount coming out, with how they expanded into California with Cove Shields, how they partnered with Mid-States Audio and Video for entrance into South Dakota. They were saying consultant to increase visibility into the reseller market. They are awarded Cove Shield contract from the dioceses in Western Pennsylvania. They released G2 visual alerts. They eliminated all their convertible debt. They established a common stock equity agreement to support its growth that came with $500,000. That's whenever you can see that it almost seems like maybe they're upping in operations. Maybe they're upping in expenses. Could be worth it in the long run if they do, if they manage to continue this momentum. Now, this is all speculative. Honestly, they may have just had a very bad year, but it does seem like this company has, it has its head on its shoulders. It's not out just doing random things for no reason. They're making a lot of these different moves for the right reasons, and it's starting to be displayed with all of the milestones that they are reaching. But like I said, they do have clear issues with their financials. I am not ignoring the fact that they have a lot of work to do, but honestly, I do believe that with the momentum they're seeing, with the increase in investor interest, with the increase of management and how their management is handling a lot of these different issues, that they can absolutely reach financial stability, and that they can get to the point of being, even in profit and extreme profit if they are capable of doing a lot of these different things. We cannot ignore the fact that they are starting to want to branch out of their industry, to branch out into hospitals and police stations, fire departments. All of these different things, all of these different catalysts could be be supremely important to growing out this company's revenue, to cut down on some of them liabilities, to increase their assets, to get down on some of these operating costs, and to see a lot more gross profit coming into the future. Let me know what you guys think about all of this information. This is all speculative. This is all just my opinion on what is going on. I am not a financial advisor. This is not financial advice whatsoever. It is simply me just giving my opinion on what I think will happen with this company based off what I've seen, the news, the interviews. It all seems really promising to me, and I have a lot of hope and potential faith in this company. Again, let me know what you guys think about this video down below in the comment section. If you did enjoy this video and you found it valuable, entertaining, informative, anything like that, you can let me know by smashing that like button and subscribing to the channel if you are new. Again, I'm posting 2 to 3 times every single day, so I'll be seeing you soon. Peace.